Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So right now as we speak, the markets are not doing great and there's so many people talking about different types of stocks, whatever. But what I want to do today is talk about companies nobody talks about. These type of companies are companies where when it comes to Wall Street, they don't talk about it. You will not see any YouTubers talking about it and so on. And these are the type of companies that actually do well overall. And I'm going to show with you guys basically 10 different companies today that are on kind of under the radar. Okay, I own 1 out of the 10 and I'll share that with you guys at the end. And so that's what I want to do. That's what we're going to talk about today. And if you're enjoying this type of content, please like the video, subscribe to the channel, of course. And the most important thing, if you can join us at the Patreon account, that will be absolutely wonderful, where you get access to all of these things. And it will cost you only 15p per day, inshallah. Okay, that will be helpful. Now, as we basically start the new week, this coming, so I'm recording this on a Saturday, so Sunday, Monday as we start a new trading week, I'm hoping that we will come back down a little bit, get into the extreme fear where people start selling some of their stocks because they're worried about what might happen in the long run. As we always said, you know what, if you're a long-term investor, this is the good opportunity for us to buy really high quality businesses. So what I'm going to do now is I'm going to share with you guys 10 companies that you probably have not come across before. And if you have, that's absolutely wonderful. So just do, as always, do your own research. Please just don't rely on the information that I'm giving you here. And I don't want to make the video any longer than it needs to be. Again, I'm giving you a quick information about the company. If you're really interested, of course, in any of the business that we're going to talk about today, go and do your own research. And as the markets come down, some of these companies are, will come back down. And again, they probably will become slightly cheaper. Right now, some of them are very expensive. So let's get started with the first one. Okay, and the first one is NVR. This is one of the home builders, 24 billion market cap. One thing that a lot of these companies have in common is when it comes to the market cap, I think the majority of them are below $50 billion. So that's probably why nobody else talks about them. It has a wide economic moat. Right now it's trading $7,685 per share. They don't pay any dividends, and the 5-year revenue growth, compound annual growth rate of 8%. I've included these two now, and moving forward we're going to talk about them in every video, because I've realized we need to know where the company has been in the last 5 years in terms of revenue growth and in terms of EPS, because we want to make sure that we're talking about the profitability, how the company manages their money and the equity that we're basically giving them, but at the same time we need to make sure that they actually are basically growing their business side of things. Okay, so 25% in terms of the 5-year EPS, profit margin of 17%, return on equity of 40%, return on invested capital of 36%, $1.4 billion of free cash flow. Right now, total return in the last 10 years, we're looking at about 21%. Growth estimate next year is 3%. Next 5 years is 6%. Fairly value right now $700 per share is where they think the price should be. So it is actually getting to that overvalued territory, so you might want to check that out. The next one is one that we spoke about a long time ago, I think, World Dominion Freight Lane, 45 billion market cap, narrow economic moat, $211 per share. 0.5 dividend yield, payout ratio right now only 14%. Latest increase is 30%, 5-year growth rate of 36%, which is absolutely huge. Okay, look at that. But they have only been increasing this for 6 years. You'll get $1.04 for every share of this company that you own for every year. Safety 81%, 5-year growth rate, 5-year revenue growth of 10%. EPS in the last 5 years 21%, profit margin 21%, return on equity of 31%, and return on invested capital of 34%. Free cash flow right now $811 million. So just below, because remember it is a small market cap, so that should be okay. That should cover the dividends and so on. Total return in the last 10 years, we're looking at about 28%, 15% in terms of the growth estimate next year, then 11%, 37% premium according to Morningstar. So it is really expensive. Okay, and basically $152 per share is where they think the price should be. And the next one that we're looking at today is Tractor Supply. This definitely we've talked about. This stock we've talked about so many times. 26.7 billion market cap, wide economic moat, $252 per share, dividend yield of 1.8, payout ratio 41%. I like the payout ratio is quite low for these two companies, especially this one, because that means they can increase it. Latest increase was 7%, 28% in terms of the last 5 years, which is really good. 13 years of increase in that dividend, $4.40 is what you will get for every share. Then safety, 68%, 5-year revenue growth of 14%. The 5-year EPS is 21%, a profit margin 7%, return on equity 52%, and return on invested capital of 20%. 580 million in terms of free cash flow. Total return the last 10 years 15%. Growth estimate next year 10%. Growth estimate after that 5%. 16% premium right now. $214 per share is where they think the price should be. The next company we're looking at is the only one on this list that I own. That's Cummins. That is almost a 40 billion market cap. Now economic got $287 per share. I'll show you how much actually I have on page, how many shares I have of this company and how much I'm up or down. 2.3% in terms of dividend yield, payout ratio 33%. Latest increase was 7%. 5-year growth rate of 8%. For 18 years of increase in that dividend, you get $6.72 for every share of this company that you own. Safety 98%. The 8% in terms of revenue growth, in terms of EPS 21%, profit margin 2%, return on equity 19%, return on invested capital of 9%, free cash flow right now $2.7 billion, total return in the last 10 years 9%, growth estimate next year 14%, then 5%, 7% after that, 21% premium, $240 per share is where they think the price should be. Now the next one is Grainger. This one is 14.8 billion market cap, wide economic moat, $88 per share, 1.2 in terms of dividend yield, 31% latest payout ratio, 9% in terms of latest increase, 11% in terms of the 5-year growth rate, 31 years of increase in that dividend. So this company is a dividend aristocrat. If they are in the S&P 500, I'm not sure if they're in the S&P 500, but if they were, they would have been dividend aristocrat. Annually you get $1.02. Safety 99%. 5-year revenue side of things 7%, 12% for the EPS for the last 5 years, profit margin 21%, 24% of return on equity, 26% in terms of return on invested capital, $466 million in terms of free cash flow, 14% total return in the last 10 years, 7% growth estimate next year, 10% after that, 10% premium right now, $80 per share is where they think the price should be. The next one is FactSet Research Systems, $16.4 billion, narrow economic moat, $434 per share. Now in terms of dividend yield is only 0.9, so almost 1%. Payout ratio 26%, 10% latest increase, 9% in terms of the 5-year growth rate, 24 years of increase in that dividend, $3.92 is what you will get. Safety 95%, the 5-year growth rate in terms of revenue 9%, and 13% in terms of EPS, profit margin 22%, return on equity 28%, return on invested capital 19%, 634 million in terms of free cash flow, 16% in terms of last total return in the last 10 years. Growth estimate next year 10 years, 10 years after that for every 5 for the next 5 years, fairly valued at the moment. $395 per share is where they think the price should be. Right now is about $434 per share. The next one is one we've spoken about recently. That's Watsco. Almost $15 billion of of market cap, narrow economic moat, and it has $396 per share right now. Dividend yield of 2.7, which is quite nice. 72% in terms of payout ratio, which is very, very high. Latest increase was 10%, 12% in terms of the last 5 years. Dividend streak of 10 years. $10.08 is what you get for every share of this company that you own, which is really good. That's crazy. Safety 55%, and the 5-year growth rate in terms of revenue 11%, 20% for the EPS, $6.8 in terms of, let's call it 7% profit margin. The return on equity 24%, return on invested capital 25%, and $526 million of free cash flow, 16% in terms of total return in the last 10 years, 12% growth estimate for next year, 4% after that for the following 5 years, 45% premium right now, $277 per share is where they think the price should be. Next one is A.O. Smith Corporation. This is one of the companies we talked about this before. $12.7 billion market cap. It has a wide economic mode, $86 per share right now. Dividend yield of 1.5. Payout ratio 32%. Latest increase was 7%. 5-year growth rate of 10%. 31 years of increase in that dividend. This is definitely a dividend aristocrat because they are in the S&P 500 and they have increased that dividend for 31 years in a row. 25 or more is the dividend aristocrats. 50 plus is dividend kings. Annual payout is $1.28, 99% safety, 5-year growth rate in terms of revenue, 4%, 8% 5-year growth rate EPS, profit margin 14%, return on equity 31%, return on invested capital 37%, and almost a $600 million in terms of free cash flow. Total return the last 10 years, we're looking at about 15%, 7% growth estimate next year, 10% after that for every single year, 6% premium, which is not far off. So it can come down quite a bit in the next few weeks and you possibly might get a chance. $81 per share is where they think the price should be. We've got 2 more to go. Pool Corporation is the next one. 14 billion market cap, narrow economic mode, $361 per share, 1.2 in terms of dividend yield. Payout ratio 33%. Latest increase was 10%. The 5-year growth rate of 20%. Dividend streak of 13 years increase in that dividend. Annual payout $4.40. Safety 69%. 5-year growth rate of the in terms of revenue 16%. In terms of EPS 27%. Profit margin 9%. Return on equity 40%. Return on invested capital of 27%. Free cash flow right now basically 828 million. Total return the last 10 years we're looking about 21%. Growth estimate next year 10%. Growth estimate for the next 5 years, however, is minus 9%, which is very interesting. 12% premium right now, $327 per share is where they think the price should be. We'll figure out basically somehow why that is the case. And finally, I want to show you Fastenal, which is 300, which has a 38.6 billion market cap, wide economic mode, $67 per share, 2.3 dividend yield. Payout ratio 71%, which is very, very high. Latest increase was 11%, 13% in terms of 5 years, 25 years of increase in that dividend, and 1.56 is based $1.56, what is what you will get. 81% safety, so nothing to worry about. Although the payout ratio is very high, you have nothing to worry about in terms of that. The 5-year revenue growth rate is 9%. Same go 10% for the EPS, 15% profit margin, 34% return on equity, and 38% return on invested capital, which is quite nice. $1.1 billion of free cash flow, which is again really good. 12% total return in the last 10 years. Growth estimate next year 9%, 6% after that for every single year. 35% premium right now. $50 per share is where they think the price should be. Right now it's $67 per share. And finally, before I move on and stop the video, I want to show you from Sharia compliance side of things. You compose the video based on Sawyer Sharia compliant. Okay, this is where we are now as we speak. So one of the things I want to show you quickly is the company that I own, but let's go back here. You compose the video so you can see the entire thing. Again, these are companies that you don't see people talking about. And sometimes one thing I would like you to do, I'm not going to do in these videos because I don't want to make it longer. What you could do is look at the total returns, okay, for the last 10 years for these companies. It's actually been decent. Okay, so that's one way to gauge to see. I'm not saying that basically what has happened before is going to happen again. You know, the past does not tell us what's going to happen in the future. But if you buy this company and it's actually when it's actually trading into its intrinsic value, and you can get about 28% total return every single year, that's absolutely amazing. Or 15% or even 9-10%. That's beating the S&P 500. And look at this one here. This is the one I own in this portfolio. And let me quickly show you just to be transparent with you guys. Cummins is there. I own 17 shares. I am up 38% or over £1,000 for a company that's industrials, that sells, basically used to sell, you know, engines. Okay, that's about it. Okay, so these companies, although they are kind of small, whatever, some of them are very, very profitable. So I'm up that much. I was buying this company when it was actually trading a lot lower. Right now, $225 per share is where my average is, or £168. Okay, and as you can see right now, 287 is where it's at. So that's why I'm up a lot. I wish I bought more. I was trying to get to 25 shares at some point, but it's just the bounce back very, very quickly. I do remember talking about it when it was undervalued, and then it bounced back very, very quickly. Anyway, I'm going to stop the video here. I hope you're enjoying this type of content. If you are, please like the video, subscribe to the channel, and please if you can join us on the Patreon account where you get access to the Discord. It will cost you 15p per day. You get access to all the brothers and sisters who are sharing wonderful practices, as well as of course all my buys and sells. And like I've always said to you guys, you get, like recently, you get access to the family portfolio. I've started sharing that now in here, so you get access to that one as well, where I'm actually been doing quite a bit of changes in the last few weeks. So if you want to see what that is, come and join us, inshallah. Have a wonderful day. Assalamu Alaikum.